Markets down, fifth straight week. The recession is in the early stages. What's up, everybody? Welcome aboard to Bubba's Bottom Line, this Memorial Day weekend edition, and make sure you say thank you to a veteran, somebody from their family, a policeman, a fireman, first responders, because without them, I couldn't do what I do and we wouldn't be free. Okay, so make sure you take the time to thank them, but you should think that we should always be thinking of them and thanking them. In the meantime, veterans, their families, I thank you, I salute you, and I appreciate you allowing me to do what I do. Okay, in the meantime, what's up, everybody? And here we are with another week, a down week for the Dow. And of course, I said this a couple weeks ago. I believe we're in the very early stages of recession. Of course, we know the economists will not tell us that we're in an early stage of recession. We know that they will continue to wait until it's too late to decide that we are indeed in that recession. And my simple point is that we can't wait to know. I'm telling you now that it looks like there's a lot of things that indicate that there's troubles are brewing. All right. Again, you can look at anything you want. You can look at any of the metrics you want, the Phillips curve, whatever the heck they look at. Okay, they're ridiculous inflation targets. You know that doesn't count food and energy because they're too volatile. But it's amazing that prices never go down fast enough. But again, just looking at the things that I would look at. Okay, and looking at the people around my life, around my neighborhood. Okay, and around what's going on. It doesn't look as good as it looked before. Yes, the economy is still humming along from that standpoint, but it looks like we're coming to a bridge in the road. And as usual, I think there'll be a little bit of a problem. And again, you know, we've had a monster run and everything's been great. So we'll see. Again, I don't want to be right, but, you know, typically things happen and you know, they change. And of course, between the political ridiculousness, the political clowns on both sides. Again, I'm not picking on any one side, but in this case, the left happens to be a little bit more of a clown than anybody else with the way that they're handling everything and the way that they refuse to do business, and yet they want to keep investigating the investigate. It'll be very interesting to see how if they get into the reports and they get into some of these other things and who's really at fault and how far up the food chain, okay, the action goes, okay? Does it go all the way to President Obama, okay? Again, I know nothing about it. I only know what I see, what I read, and of course, interestingly enough, okay, we're seeing more of the deep state, right? So we'll see how it plays out. Again, it's really a joke. And of course, the federal government in general is a joke along with the rest of it, because of course, it's way too big and it doesn't do what it's supposed to do. And all it does is really piss away our money. Okay, so we'll move on from there. In the meantime, interesting enough, another sign of issues, negative rates are hitting the mortgage-backed market. Okay, which obviously mortgage rates are very low, but that's a little bit of a scary thing here. Again, when you start to see people settling for very small yields on junk bonds, and you see people selling for very small yields on other products that are typically higher yield, that's a problem. Again, nobody announces the problem. The markets don't announce themselves. Recessions don't announce themselves. You have to take the actual metrics of, you know, common sense, which we know the Fed doesn't have any of that, so they could never say that. But you have to take some direct common sense to understand what may be happening here, okay? In the meantime, you're seeing one of the only reasons that the market has continued to rally is more responsible from the stock buybacks than it is anything else, okay? Again, I don't say it's a bad thing or a good thing, okay? But the stock buybacks have left the markets buoyed here because, again, if you're a company, you're paying out a 3% dividend and you can borrow money at 2%, doesn't it make sense to borrow the money at 2% and pay back at 2% instead of taking the money out of the company and giving 3%? Again, I'm just saying, right? I don't know, just a question, right? But again, they're generating so much cash that they are able to, because again, for them, they have all the capital they need, so they continue to buy back stock. And again, I don't have a problem with it, but that is one of the reasons we're seeing problem. Volume is pathetic still, okay? And of course, to me, as I've said for the last couple of weeks, this looks like a retailer's rally, okay, whenever it rallies. But in the meantime, we're headed down lower. We've been breaking some key levels across the board, so we'll talk about that when we get into the actual markets. But again, the negative interest rates and the low paying yield on some of the higher yielding products, that's always a concern when people are looking for new places to chase yield and they're willing to settle for less than the asset should be trading for or less than it is worth. Okay, so again, I'm just saying. Okay, so we had a big, it was last week was the tariffs, the no tariffs, the trade wars, the no trade wars, the Cold War, this war. Look, I personally, again, I'm not an economist. I don't try to play one on TV. I just give my opinion. Okay, but I don't see that big a deal with the trade wars or the tariffs. Okay, I understand what they keep saying. How much is it going to cost? And it's going to raise the price of all our things in America. And of course, Walmart's going to struggle. You know what I've seen, and I've used this analogy many times before here and other places, but they'll get their prices up and they'll probably be over raising, blaming the tariffs because they have somebody to blame. They're not trying to make more profit. They're trying to blame somebody. So, we got the tariffs, so we got to get the prices higher. So let's blame that. Okay. And then when we do settle, the prices will never come down again. Okay. This is the only commodity that almost really trades fairly is oil, okay? Because the minute prices go up, they raise them at the pump, right? Okay, now they make extra money on the stuff that they have in the ground already that's in their pump. But in the meantime, they do come down, but they never come down quite far enough to match where the price of oil is trading. But at least it does fluctuate up and down, where prices at the grocery store don't come down. Okay, prices at Starbucks don't come down. So again, I'm sure at Walmart they won't come down. And again, if you go back and look at the first oil crisis, where Exxon was, oh my God, the world is coming around, OPEC is going up, blah blah. In the meantime, they had record profits, and I would expect this time to be no different, because I'm a big believer is that this time is never different. And John Deere is already complaining where they're going to make money from and how they're going to get out. Well, again, I'm not saying it's a good thing. I'm just saying that somehow it'll be figured out, and somehow all the stuff will be sold. There isn't that many producers of their equipment, okay? And so I think that things will work out just fine when it gets all said and done. I mean, after all, we still are the number one economy in the world, and we still are, the biggest. So we still have enough power to get through. Again, my opinion, that's the way I see it. But again, these buybacks and what's going on and the tariffs, I mean, again, does it make a difference? I don't think so. I think that, again, for the overall economy, I don't see what they're saying. And again, I could be wrong, but, I think that we survived before, and I think we can survive now. And again, it'll just force free markets to bring prices down here. And of course, I think now labor costs are cheaper than they were. So a lot of reasons to believe that it will work out, but if it doesn't, it's not going to be that big of a crisis. Okay. That's the way I see it. Now again, I could be 100% wrong, but I'm just saying that's what I see. Okay, the bond traders, the option traders, are pricing in a rate cut, so they're gambling on a potential rate cut. Now again, can there be a rate cut? Listen, the Fed can do whatever they want, right? I mean, and certainly the president would like to see a rate cut, because every president who comes into office, whether they be Democratic or Republican, want a rate cut because they want to keep stimulating the economy, borrowing money, okay, letting the banks continue to sell. It's a great deal when you're a bank and you can lend out at 10 to 1, okay, what you have in reserve. And I still would like to say, in my opinion, that the banks are in trouble and don't have enough in reserve, okay, for what they're lending out. But let's say that they do. I mean, I think the stress tests are a bunch of crap. But anyways, wouldn't you like to lend out $10 for every $1 you own? Okay, collect interest on that $10, so you're collecting on $10 versus $1, number one. And then if you go out of business, if you go bust, the Fed comes in and says, okay, well, we'll print some money for you to make sure that you stay liquid. I mean, it's not a bad deal, right? I mean, you can't you can't you can't change that, right? That's what happens. The markets change and we go from there. So at the end of it, okay, here's what we have. And of course, the banks have a big edge because again, they don't have to worry about the going out of business because again, the Fed's going to back them up because they are obviously too big to fail again, which is another joke when we talk about it from that point of view. Okay, so I think what you're seeing now is billions of dollars have been lost in margin and things like that, margin debt and things like that, and I think that becomes a bigger problem. Okay, when we're looking at things. So again, there's a lot of things going on that are not real healthy and real logical for the market. Okay, and I think that's something that we have to look at. Okay, is there's things going on that don't make a heck of a lot of sense, and I think that I think the media, okay, and this is the left and the right media. Obviously, they both deliver news, okay, that is not necessarily the actual news, but the news they want to interpret it as to make it more dramatic as they talk about, for example, we talked about this, the hog market. Everybody wants to say that the African swine flu is going to drive pork prices to the moon. In the meantime, they're coming down. Okay, that's the meantime. In the meantime, they're down 12% from their highs since this whole news story broke. Okay, so is it really, and again, everything they report is always so sensationalized that it pisses me off. Okay, I think that it's a joke, and it really is unfair to the average investor on the street because many investors turn to the news, turn to them for their advice. And of course, right now, they're all just buy every dip. We're never going down again. Every expert that comes under, we're never going down again. Now, again, if you have a long-term horizon in the market, then you should be long. You should own equities forever. Okay, if you can stomach the pain of the next sell-off, okay, and you have bullets left to buy more when it does go down, then yes, you should stay in the market. We hedge, so I'm always 100% invested personally in the market. Okay, as are the people that work with me. We're always 100% in because we don't have to worry about it. But if you're not hedged, but you should stay in the market because again, the market compounds equity over time. So be comfortable with what you have in the market so that you don't have to worry about when they do collapse. Because listen, they're going to go down again. It's not like we're going to go up forever. We're going to have another meltdown. And then, 10 years from that, we'll be eventually higher. So my simple point is that, yes, it's fine if you're a long-term investor, but everyone's buy now. Okay. And everybody's so bullish, but then they come out with these stocks that are not bullish stocks, right? They're, AT&T and they're stocks like that are just deal dividend yielders, which is fine. Again, there's nothing wrong with any of that. Okay. It's just simply not actual factual. And of course, what happened is you jump in now, maybe you even go to margin and get yourself over leveraged and the market falls apart. So again, just something to worry about. And I think, I think the great message of the week was last, I think Sunday, a commencement speaker at I think it's Morehead College or Morehouse College in Atlanta. He picked up the entire tab for all the student debt. I thought that was pretty cool. I'd like to send my kids there. Maybe he'll send me a check for my kids' tuition. But I thought it was pretty cool. Okay, a billionaire who was speaking there, picked up the debt. It was about $40 million, and did a great job. In the meantime, once again, happy Memorial Day, and we're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. What's up, everybody? Hey, we got our new equity portfolio product coming out in the next couple of days. Really excited to present it to you. But in the meantime, if you'd like to see our hedging or futures webinar, please email me at bubba@bubbatrading.com, and I will send them out to you. And of course, if you want to help our high school program, which would be appreciated, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, markets last week down for the fifth week in a row. Now again, they weren't down ugly. They did come down and test the bottom. But I think if you want to take a look at the overall indices, I think you've seen the S&P and the Dow are at some pretty key levels. The NASDAQ is breaking down. Okay. Now, again, that does not mean that we're going to collapse on Tuesday. Okay. You can assume, okay, that there'll probably be a rally in here somewhere. Okay. Kind of like we saw on Friday, right? Again, markets don't go straight in one direction. Okay. Except for the grain markets right now, corn and wheat. But typically, markets don't go in one direction. They can be heavily sold, but you're going to see what we say is a vicious rip your face off rally or a dead cat bounce. And I would think, you could see a little bit more downward, but you'll see a bounce. We're right around some support levels. But again, for the last 3 weeks since May 1st, we've been short and we're staying short. Okay. As we stayed long from January 1st until May 1st, now we're staying short. Now that could change. Okay. Now again, that doesn't mean I'm jumping in tomorrow and adding more short positions, or am I going to sell them into the hole? But what it means is that every rally that comes into the market to a resistance level, I'm going to be a seller until that changes. And I don't see it changing anytime soon. So we're going to continue to be sellers. We're going to continue to work our way into that market and stay short the market, because we are looking for a much bigger collapse. Now again, we're not predicting it. We're just saying, based on history and based on what it looks right now, we see a much bigger correction coming. However, again, we could change our algorithm. We could change what's going on. But for now, we are staying short the markets without fail, without even thinking about it. And of course, oil, see what happened to oil? And again, we kept saying 64, 64, 64, 63 was the next level. Bang. Our first target down was 60. Our next target was 58. We hit 58, and now we're pausing right around 58. Went below it and then came back above it. All right. So again, I would not be surprised to see oil rally back to 60 Tuesday, Wednesday, or Thursday. Okay. And in which now we would be a seller at 60. Okay. Again, we're staying short. Okay. We did cover a little bit on the way down, as we said we would. And now we will be resellers at 68. At 60. Okay. The next target below will be 55 or so. And that's what we're looking for and targeting, because we're actually targeting below 50 by the end of the year. All right. Now, oil is now lower now this year. Everybody's, oil's going up every day. It's at highs. Well, now it's lower than last year. Okay. So again, it wasn't hard to see. And I think when you understand the markets and how they work, you'll see a much better opportunity. And of course, gold had a nice little dead cat bounce on Thursday, a little soft on Friday. But again, it bounced right to where it should have. Everybody gets excited. Oh my God, we're going to miss the gold rally. You should never be worried about a rally you may or may not miss. Okay, we have a saying here at Bubba Trading, and that's, it's better to wish you were in a trade than to wish you weren't. Okay, so again, gold, for me to want to get interested in gold now, it has to go back over 1,300 and hold. The rally on Thursday was just another selling opportunity, which was at resistance near around 1,290, and you sold it. Okay, it closed a number of times below 1,280. To me, it's going to 1,240. Okay, now again, things can change to change that pattern, but for now, we're still targeting 1,240. I see nothing else, no reason to believe that that's going to be any other target. Okay, now the grain markets. Whew, man. Now we've been long grains, and we called for the bottoms on that a couple weeks ago on a Monday when everything was falling apart. But that's not the point. The point is the rally they've seen now between wheat and corn has been too dramatic. I mean, this has been straight up parabolic. Now, it needs to sell off a little bit from here. Okay. Again, you can hear a lot of reasons why there's shortages now. All of a sudden, we went from oversupplies to shortages, maybe weather, the whole deal. Okay. Can't get it planted. Look for a little bit of sell. But again, we are buyers. Okay. But I would expect, the way corn closed and wheat closed, I would expect a pullback. Again, we're not getting short corn. We're staying long the grains. But I would expect a pullback probably in corn to about 380, okay, 385, and probably in wheat to about 460 or so. Soybeans look like they're making a bottom. Okay, the price action suggests that they're finding a bottom, and we'll be looking to buy that bottom. And we're already long a little bit, but we'll be getting in heavier as soon as we can confirm that the bottoms are in. And the livestock markets, as we said earlier, hogs, and they were up to 100, they're down the 80s. Okay, and they were down limit on Friday. Now again, it doesn't mean they won't pop back up. I think you're just seeing a big consolidation pattern. But as far as what's going on with the African swine flu, unless there's another major development that nobody knows about, they're probably headed, between 84 and 96, and then possibly can start to sell off from here. Right now, we're still watching them, But again, we want to see how they trade in this consolidation pattern. Bonds continue to go up, which is again why the yields and why the bond traders in the options market are predicting a half a point cut, because of course we're making new highs in bond futures almost every day. Okay, and again, we were short bonds first, and we had to eat it and reverse, because everything reversed now. So again, they continue to go higher, and they were up, I don't know, a point and something the other day, and they continue to try to charge forward. Again, I don't think it's factual, but I'm not going to fight what's going on in the market, right? I think that something's going to change all this, but right now there's no reason to stand in the way of something if it continues to go in that direction. I think that's one of the mistakes we often make, is to try to outguess and outsmart the market. I think you put yourself in a bad light when you do that. Okay. Where am I at? I'm lost. Help me. Help, Mr. Wizard. Okay. So generally, okay, markets themselves, okay, are doing what we thought they would do. Okay. And they don't always do what we think they're going to do. But again, if they don't do what we think they're going to do, we know pretty quickly, and we can reverse that position and go the other side. I think that's one of the things you have to remember when you're either trading or investing. Okay. You want to be on the side of probability. Okay. You want to be on the best side, which is the side that gives you the best chance. Doesn't make you always right. Okay, just like if you're a poker player and you're holding pocket rockets, doesn't mean you're always going to win, but you do have you are the favorite going in. So I would look for some more down action, but again, this should be another quiet week coming in, right? We're coming back from Memorial Day. Markets don't open till Tuesday, although they're open electronically on Monday. Okay, but again, shouldn't be much action unless there's a major crisis somewhere, or there's a major announcement. Again, the holiday trade, the global trade is very thin, so the markets could have some big movement, and we'll see what that brings. Okay, but in the meantime, I think that you could look for markets to have some churning action before working their way lower again. Rallies need to be sold. That's really the way we're looking for it and how we see it. The metals look, just bad in general. Bitcoin, got up over 8,000, pulled back a little bit. Again, we'd be looking to be buyers somewhere probably in the 6s, okay, or one of the other cryptos. But again, I think you just have to focus on the markets. I think you have to learn how to hedge your portfolio, because you can also hedge the metals, so you can be in all things and be equally hedged. So I think that that's something, because gold, as many people want to say, well, it's a fear trade. It's really not a fear trade. It's not a hedge against your equity portfolio. It could be a hedge against other things, but it's really not a true hedge, because again, markets do not always correlate at the same time or when you expect them to do. So what can happen is you can get in based on a reason. The reason happens and the market doesn't move. In fact, it goes the opposite way. You get out because you can't take the pressure, and then it does what it's supposed to. So again, don't worry about correlations. Worry about high probabilities, being in the right trade at the right time. Okay. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horowitz. And of course, again, thank you, veterans, your families, first responders, all you. Happy Memorial Day. We'll step out here for a break. We'll be right back with my commentary when we come back. What's up, all? Hey, again, I want to remind you, we got our new product coming out. We're really excited. It's portfolios. We've got 3 different portfolios, all algorithmic driven, either long or short, a stock, both sides, using options to do that, and clean options without premium. So it's really pretty cool. Excited to present it. In the meantime, don't forget about our webinars if you'd like to see them for free, the hedging or the futures webinar. Just email me at bubba@bubbatrading.com. And of course, our high school investing program, if you want to help us out there, Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back, everybody. And here we are with my usual commentary. And I saw an interesting special this week. And obviously the big battle in the country right now is capitalism versus socialism and the whole thing. And, you saw maybe you saw the town hall on Fox. And of course, I mean, socialism does not cut it in my views, although we do have some socialistic policies in this country now. But it was interesting. They did some interviews on a college campus. And I felt it sad that college students don't know the difference between capitalism and socialism. Okay. When they were asked what they both do, nobody answered. I'm sure there was, but they only showed people that did not answer it. And I think, isn't that one of the problems? That's one of the reasons my high school program's in play, is to try to teach people financial literacy at a young age. But it's interesting that why are the young people so interested in socialism? Because most of them, their parents pay for everything. So they're on a socialism program anyways. I mean, I paid for my kids, so I get it, okay? But they don't understand that you have to work. And again, socialism is a bad thing because, again, it takes away productivity. But it would be nice that if you're paying $50,000 a year for some kid's tuition, that they knew something about what's going on before they would just run out to the polls and vote for Bernie or vote for one of those socialist candidates before understanding, because you want to see the best example of socialism. Look at Venezuela, okay? Venezuela was the richest in the world at one time. They had a booming, but of course, until the bosses got in and stole the money. Kind of sounds like the Fed, doesn't it? In the meantime, it would be nice if our education system actually got away from straight testing everybody and quit worried about testing and actually taught the kids some real common sense and some real world activities, so we could get out of this cycle of being run by people that only know what it says in the library and don't know what it says by what they see with their own common sense. In the meantime, happy Memorial Day. Again, I salute everybody, but my veterans, their families, first responders, police, fire, thank you. Thank you for letting me be here. Have a great Memorial Day weekend. We'll see you on Tuesday with Bubba's Daily Update and back again next week with Bubba's Bottom Line. Thank you, everybody. Happy Memorial Day. See you next time.